Yes, ladies and gentlemen, welcome back to our end of the market update for this Tuesday, June the 22nd of 2021. So you hear my excitement. You hear my excitement in my voice, and that is because yesterday we were discussing two outcomes for the markets. Okay, outcome number one was that we were going to get squeezed between the 50-day simple moving average and this trend line here in the orange line that we see. All right, before we dive in, if you are new to the channel, guys, make sure you smash that like button, subscribe to the channel, as I am here to help you navigate these markets. Now, my preferred technical analysis or form of technical analysis is using the Elliott wave theory, okay, which has been helpful to me for a very long time. Okay, I also use our traditional indicators, support and resistance, simple moving averages, and whatnot, but the suggestion here states that wave 3 is now in development, guys, all right, in the minor degree, unless things change, okay, because again, markets are not written in stone. We could always do something different. The markets will do what the markets will do, but Elliott wave interpretation will help us guide ourselves to the best possible outcome, okay, forecasting the next move, okay. Even the weatherman can get it wrong, so just keep that in mind, okay. So all this interpretation is subject to change. Okay, so let's review this wave count here. So from the COVID lows, we go up in primary degree wave 1, ABC down in 2. We originate this trend line support from the low of October. Okay, intermediate wave degree 1 down in 2, minor 1, 2, 3, 4, 5 to complete the intermediate wave 3. Then we go down in 4, and then we're looking for the wave 3, right? Which our upside target is at 526, which, I mean, it sounds crazy. It sounds crazy. But again, yesterday I said that this is our most aggressive and the most bullish interpretation that we have. Okay, because the other one that we had, which I'll just skim through it briefly before I dive into the cues, was suggesting for the downside, and that was going to be the primary degree wave 1 to complete. But anyway, we'll dive into that later. All right, now what we have here is that turning on our indicators, right? Let's just go on with our 50-day simple moving average. Okay, yesterday we were noting the fact that we were stuck between the 50-day moving average and the trend line. Okay, we were going to either do one of two things. Either we were going to reject it and head on lower, or we were going to squeeze and head on higher. So it ended up favoring the bulls today. It ended up breaking on higher or squeezing. Okay, a lot of this was interpreted as we were going to reject it and head on lower. Now that could still be the case, all right, but I am now favoring the upside to complete the wave 3 in the minor degree. All right, now taking us down to the 1 hour time frame where we can dissect further this interpretation, guys. All right, let me now hide the 50-day simple moving average, and here we go. All right, wave number 1 in the minor degree completed on May. Okay, sold off in ABC to complete wave 2 in the minor degree at 38.2% retracement. Okay, just shy of it. We held support in the trend line that was originated in October, as I mentioned, and now we completed wave 1, which made new highs. ABC down into the wave 2, which is the retracement of the wave 1 at 50%, which is 415. We broke just briefly below it, but we held it as support. Okay, and now here we are. So the levels that we looked at yesterday were the previous all-time high, okay, from May, which now is acting as support. Okay, so if we quickly review those levels, all right, we originated that level here. We sold off in 3 waves to the wave 2. Okay, we went on higher, rejected it. All right, we broke above it, made new highs, and held it as support very briefly. Okay, we then sold off in 3 waves, and then here we are. Okay, 423.08 was the resistance that is now acting as support. Our next level to watch, okay, it's going to be this. Our next level to watch is going to be 425.36, which is the previous wave 1 high here. Okay, but our ultimate goal is to reach the 100% extension of wave 1 compared to wave 2, which gives us 435.89. All right, that's our ultimate target in this wave 3. All right, but the short-term interpretation should suggest that perhaps this is wave 1. We have yet to know this. All right, if this is wave 1, then wave 2 should backtest the trend line support. Okay, let's take a look. If we take a simple, actually let's dive down to the 30-minute time frame. All right, so if we take a simple retracement tool from the low to the highs, okay, we should see the 23% at the very least, because this was pretty much vertical. I anticipate that the pullback will get bought up really quickly, so we could find support at the 23.6%, 421 spot 84, which comes in confluence with several key levels. Let's take a look. If we draw our simple line across this level here, we're going to see the following. We're going to see that it is the previous is going to be support from the trend line. Okay, support, trend line support is going to be support here, support in this cluster, and then support here. All right, also in this area as well. So there's a possibility that we may see a pullback to that level at the 421 spot 84 and act and hold it as support before we head on higher. So this could be a viable buying opportunity. All right, guys, keep that in mind. So 421 spot 84. Worst case scenario is 420 spot 52. Okay, but ultimately our upside targets should come in at the 435 spot 89. All right, guys. So I think that was pretty clear. Markets are showing positive outcomes. All right, and we should be all right. But let me show you the other count. It's not still out of the question, but it's like probably out of the question, I should say, right? So the outcome here was that primary degree wave. Actually, no, this isn't the wave 2. Delete this real quick. So the outcome here was that we're looking for wave 1. We're gonna look for wave 2 to hold support. So sorry, to hold resistance in the trend line. Okay, but it did not. We went above it and we blew past the 78.6. All right. So maybe, we'll see. I don't think this is the case. So let's just visit this at another time. All right. So taking you over to the Qs. The Qs are making new highs, but as you can see here, let me take you over to the 1 hour time frame. The Qs are having a little bit of trouble breaking this trend line resistance, all right, that originated from the February highs. Okay, so February highs was intermediate wave degree 3, A, B, C into the intermediate wave degree 4. All right, we go down and up in 1, down in 2, 3, 4, and now we're in 5. Let me take it down to the 30-minute time frame where we can dissect this further. Okay, so yesterday we were discussing the possibility that the 1272 was going to be resistance, and that would have been the wave B. Okay, I even went out to label this as the wave B here because it was holding resistance, but surely enough today we broke above it. And so what I'm looking at this is that yeah, there you go. The way I'm looking at this, guys, let me actually undo this because we can't delete that trend line. All right, here we go. So perhaps, just perhaps, okay, wave 1 completed here. This is wave 2. I'm going to delete this. Okay, so wave B is here. Wave 2 was pretty shallow, so we can see 3-wave pullback, right? A, B, and C to the 23%, which is the primary degree wave 2. If we take a look at our substructure here, so we take an extension from the wave A to the wave B, we'll see that the wave C was at least the 1618. Let's take a look. All right, actually, yeah, 1618, and let's turn to the 200. So it was a pretty deep retracement there, or extension rather, in the orange wave. So we went all the way down to the 200, which is pretty steep for wave C pullback, but it's not out of the question. Okay, we held support at the 337 spot 73, and then we head on higher. So the way I'm looking at this, guys, so if both the S&P and the S&P and the Qs, right, the Qs are already in all-time breakout, but we have to get above this trend line. This is 1, 2, and we're in the makings of the wave 3. Okay, so levels to watch is the break above this trend line, which comes in at 348 spot 41. Okay, if we break above this, then we are all out. All right, guys, so that is my interpretation for the Qs. As always, I do appreciate your time. Thank you so much for your patience. Thank you so much for subscribing. Thank you so much for hitting the thumbs up button. Leave your comments down below. Let's discuss. I'm getting a lot of feedback from a lot of you, and I'm loving the engagement. Okay, thank you so much once again. I shall see you guys tomorrow. Bye-bye.